Prime Minister Modi's visit to the US. Let's cut the hype.
इसके बाद तीनों के बीच कुछ बात हुई और सभी हंसने लगे। ग्रीन डायमंड दिया। इन तोहफों के बारे में आपको पता चलेगा तो आप हैरान हो जाएंगे।
And cut to the chase. Now you might think that this trip is about the US and India. It isn't. It's actually about China. 3 things going wrong in the world's factory. First, labor costs have picked up. 2, the US and China are engaged in a massive trade war, with each one slapping tariffs on each other, essentially attacking each other's companies. And 3, COVID. Companies realize that with so much of their manufacturing concentrated in China, if something happens there, they're essentially left high and dry. And so a lot of global companies have started to adopt something known as a China plus one strategy. Basically saying that, look, we can't discontinue our China manufacturing, but let's maybe shift some of it to other countries where risks are lower. Now, if companies are looking to move some of their operations out of China, that's a really, really big once in a generation opportunity for emerging markets like India. It's like Virat Kohli or Dhoni, when they're in form, suddenly mistiming a ball and now it's floating high up in the air. Obviously, a number of countries are now running to catch that ball. So far, India has struggled. Have a look at this chart. This is the country's share of global goods exports. You can see that India's share of global exports in the last 10 years, the red line, when all this drama with China and the US was taking place, has essentially been almost constant at around 1.6 to 1.8%. So, not really a massive capture of market share. Now have a look at the black line, Vietnam. Vietnam is almost doubled from 0.7% of global exports to 1.5% currently. Sure, Vietnam is also facing a bunch of macro problems as we speak, but just think for a minute. Here's a country whose economy is hardly 12% of India's size, and yet, in less than 10 years, its level of exports is close to our levels. Now, to be fair, India is trying to compete. We have cut our corporate tax rates. The government has been massively investing in infrastructure in a way that we haven't seen in recent history. We now have this PLI scheme, which in simple terms is giving manufacturers subsidies to produce in India. But it's been a slow start. I mean, we seem to be making a lot more mobile phones. Our electronic good export growth has zoomed, even as overall export growth is in negative territory. Now, some people might say most of what we are doing is just assembling stuff that we are importing. But hey, something is better than nothing. Today we are assembling mobile phones. Tomorrow we may be making mobile chips. Which is why it is so important that during Prime Minister Modi's trip, Micron, a semiconductor company, is saying that it's looking to invest in India. Or, as a matter of fact, Elon Musk is talking about making factories here. Or General Electric talking about producing jet engines in India. Mind you, even then, there are reports that Micron may not actually be manufacturing chips, but instead mostly assembly, testing, and packaging. Now, this doesn't downplay their investment, it just shows how steep that climb is for India. Look, we have one of the world's largest population of youth. Over 2/3 of our 1.4 billion people are in the working age bracket. We need to get them skilled, we need to get them jobs, we need to upgrade their standard of living. And so this shift of focus from China to other markets is essentially India's do or die moment. For more such insights, like, share, and subscribe to the Bond Economist.